and a very warm welcome to 3.0 TV. I am Ruchi Sharma. Virtual digital assets or VDA markets traded higher on Friday as risk on sentiment received a boost from the tech earnings amid hopes of the Federal Reserve slowing rate hike pace during next week's FOMC meeting. The lingering concerns over US banking continue to raise digital currency's safe haven appeal. Bitcoin traded above the crucial $29,000 levels. IC15 index of cryptocurrencies was trading up by 0.7% at 39,500 points. Meanwhile, investors are looking forward to the much-awaited Federal Open Market Committee meeting scheduled next week. Market participants anticipate a hike of 25 basis points in the interest rate decision. Going forward, initial jobless claims for state unemployment benefits dropped by 16,000 to a seasonally adjusted 230,000 for the last week, as against broader expectations of 248,000. The Labour Department report suggested a tight labour market and also underpinned next week's rate increase decision. Additionally, first quarter gross domestic product for the year 2023 was estimated to have grown at an annualized pace of 1.1%. However, it came below the market expectation of 2%. Moreover, the economy grew at a 2.6% pace in the fourth quarter of 2022. In other news, creditors of the Celsius network are attempting to subpoena the Bahamas-based bankrupt cryptocurrency exchange FTX in order to obtain information on specific customers linked to a series of questionable crypto trades last year. Creditors of the failed crypto lender claim that these users may have manipulated the price of Celsius native coin, CEL. The global cryptocurrency market cap hovered around the $1.21 trillion mark as it jumped almost 1% in the last 24 hours. However, the total trading volume tanked about 36% to $46 billion. Interestingly, the US dollar rose as weaker than expected US economic growth in the first quarter is likely to discourage the Federal Reserve from raising interest rates next week. US stock futures fell as investors digested the latest round of corporate earnings, including results from Amazon. Dow Jones Industrial Average futures fell by 40 points or 0.12%. S&P 500 and Nasdaq 100 futures slipped 0.11% and 0.15% respectively. Bitcoin was trading at $29,315, up 1%. The most popular cryptocurrency has experienced a lot of activity during the past few days. However, false reports that wallets linked to Mt. Gox and the US government may be disposing of significant amounts of BTC, causing the asset to fall by almost $3,000 in value. When the news was revealed to be false, Bitcoin reclaimed $29,000 levels. Ethereum, the second largest crypto, was up by 1.4%, trading at $1,912. In an interesting news, a total of $4.6 billion worth of Ethereum and Bitcoin options are set to expire later in the day, out of which Ethereum options account for a notional value of $1.5 billion. However, it will be interesting to see whether the options expiry will have an impact on the largest cryptocurrencies. Solana SOL was up 4.5% and was trading at $22.6. The price of the Solana project, an Ethereum alternative project, has more than doubled as of 2023. The asset outperformed Bitcoin, the most valuable asset by market capitalization, in its year-till-date returns. Surprisingly, the SOL price has recovered most of its losses post-collapse of the FTX exchange in 2022. Cardano's ADA token was up by 0.3% to trade at $0.40. Avalanche AVAX was trading at $17.6, higher 1.3%. Polygon Matic was trading up by 1% to trade at $1. Doge, the popular meme coin, was trading up by 0.7% at $0.080. Shiba Inu was trading up by 0.1%. While talking about the ongoing development in the Shiba Inu ecosystem, the community is planning to soon launch a customized cold wallet designed explicitly for Shiba Inu. However, the upcoming Shiba Inu cold wallet would boast intriguing technology with a distinctive appearance, analysts said. Ripple's XRP token traded at $0.47, up by 3%. However, BNB was down by 3% to trade at $320. Polkadot was down by 0.2% to trade at $5.9. That's all the Coin Monitor for now. This is me, Ruchi Sharma, signing off. Do like, share and subscribe to 3.0 TV and have a great day. The worldwide NFT market has recently experienced a substantial decline, with numerous platforms and investors suffering the effects. Last year, when the excitement surrounding NFTs faded, the market witnessed a correction, resulting in a drop in trading volumes and valuations. OpenSea, one of the largest NFT marketplaces, has been particularly hard affected, with one of its most important investors, Tiger Global, lowering its valuation significantly. According to the information, Tiger Global, a $13 billion tech-focused venture fund, has announced that its stock in OpenSea has decreased from $126.8 million to $30.2 million, a 76% drop. The firm became one of the largest investors in OpenSea when the NFT platform raised $300 million during a Series C round earlier last year. In its report, Tiger Global valued OpenSea at just $3 billion, despite the popular NFT marketplace hitting a $13.3 billion valuation at the height of NFT mania last year. This value drop has been largely attributed to the drop in NFT sales plummet and increased competition from rival platforms like Blur. David Ayer, the director of Suicide Squad and Bright, has been tapped to create and produce Lollipop, a forthcoming interactive racing series with an NFT component, with his Cedar Park Studios partner Chris Long. The series, which was initially reported by Deadline, will invite audiences to actively participate in a narrative written by Ayer as they compete in a virtual racing circuit linked to the plot. Episodic streaming, gaming, and professional sports will all be incorporated into the next-generation storytelling experience. Ayer spent much of last night attempting to explain that despite the involvement of NFTs, the initiative is not a fraud, is not linked to a crypto exchange, and that audiences should wait for more information before jumping to judgments. The series will run for 10 episodes and will feature 10 races set around the world and highlighting local cultures. The races will take place on digital street courses in cities beginning in Los Angeles and will incorporate interactive gaming with the story in a way that will allow fans to directly impact aspects of the races. Cogni, a new bank, has announced that it will distribute Soulbound non-fungible tokens holding KYC information to users of its crypto wallet. Customers' Web2 KYC verification performed by the bank at account opening will be transferred to a Web3 environment by the Polygon-based NFT. Cogni, which is insured by the Federal Deposit Insurance Corporation through a regular New York bank, launched its non-custodial multi-chain crypto wallet in January. Users can use the wallet to transmit, receive, and store bitcoins and NFTs. Users can choose mint, the non-transferable Soulbound NFT, which dApps can then decrypt with the authorization of the owner. The bank-level KYC information published on the NFT satisfies US KYC regulations and will be available to partnered dApps without further intervention. Cogni foresees creating a marketplace of dApps that can be connected to, including KYC verification, with only a few clicks. In the upcoming segment on regulations, we will update you about the following news. UK Tax Authority proposes changes to treatment to DeFi lending and staking. UK charities offered guidance for accepting crypto donations. Stablecoin reserves need to be diverse, European Union Bank Agency chief says. Stay tuned for more updates. We will keep you connected to the evolving world of NFT.
For accurate and latest updates of cryptocurrency markets and global regulations.
Metaverse and Web3.
3.0 TV covers the latest crypto crimes.
Keeps you updated about the global crypto events and exhibitions.